Hello, traders. I hope everyone enjoyed in the States a long weekend. I want to wish everyone who celebrates Yom Kippur a Happy New Year. I think there's an old Wall Street expression, sell on Rosh Hashanah, buy on Yom Kippur, or it may be the other way around. I'll let you know which one worked. Also, I have a news flash that I want to share with everyone. Everyone's wondering when um, the Fed chairman will begin the taper. Well, I actually know when he's going to raise rates. There was a breaking story, and here it is. Spotted, Jay Powell announcing the first rate hike. Everyone see that? What do you think? Now, they talk about how becoming president can really age you over the course of a term or two. Gosh, it must have really been rough for Jay. Anyway, this is when you can expect a rate increase from our Fed chairman. So let's talk about rates since I started off there. We had a very weak number on Friday, big miss. And to me, the standout was what yields did. So here was the number. They sold it off a little bit on the miss. They're expecting, I don't know, 700,000 and got 200,000 and a bit more. And look at what happened here. So, when you get news that a market should react, we should have really seen yields cave on that disappointing number. Instead, look, we're threatening a breakout out of this horizontal range right here. And this has all kinds of implications, especially if we're going to hold here. It has implications in the gold. That's why you're seeing a little pressure in some of the precious metals. There's silver. Still think they're going to make another run. I was thinking 1840, maybe that still happens, but I do want to just stay focused on that. So that's your 10-year. Look at the proxy for 20-year bonds, which, they're opening now with a gap lower opening. But when I look at this, it's a pretty classic bear move, rally back to old support, new resistance at this 53 level and starting to roll over. And we start taking out this 139 level. We could go all the way back to the lows in late 2018, not even, where we went to during the pandemic crash. So whether the Fed does anything or not, the market will do it without the Fed. They have control over the short end, but not longer term yields. And longer term yields, to me, this looks just like a normal corrective bounce. And the trend is changing after a massive distribution top. The only thing that would change my mind now would be closes over the high from a week and a half ago back over 153, and we're opening down 92 at 47.26. So the bonds look like they're under pressure. No one's really talking about the fact of, bonds really not responding. They should have, yield should have dropped and the bond should have rallied. No one really talking about that from Friday. They were all concentrated on risk going up. We had another big up day in stock indexes. We had huge up days in the metals. We had a weak day in the dollar, and no one paying attention to what's happening in yields. And also, even though the market came back, some credit spreads are not. I still want to point this out, that people are buying junk bonds for the yield. That's why they're pressing highs. And remember, the word for high yield bonds is junk. And here's investment grade corporates, which are much weaker, not even close to the highs, after Powell jawboned them up after the COVID crisis. They also look like they're rolling over with treasuries. But the sovereigns, surprisingly, are the weak sister in the whole interest rate complex. So to me, they were supposed to be the flight to quality. Instead, you're getting a flight to quality in junk, and it's just chasing yields. Something that I want you to write down, and it's something I learned early in my career. The higher the yield, the higher the risk. Okay, so don't just chase yield, because at some time before this year ends, I think it's not going to be the return on capital, but the return of capital. So keep that in mind. We're getting a little bit of an upper, little pop in Apple here. You guys know I'm calling this an ascending triangle with a potential third drive to a top here. But let's get to the currencies. So respectable day with the dollar being strong, that the euro's only down 12. Most of the weakness is in cable and Aussie. And the Dixie is rallying back to, you know, what I thought would be an important resistance level. I drew on some of these shorter term, and it was 92.40. And look, so far being rejected. You see this neckline, old support becomes new resistance. And so far that's been it. So I would say now that we've established this early morning low, and you were short the dollar either based upon your own work or my narrative and trading suggestions up here, and then again here, and then again on the breakdown, that you don't want to see the dollar closing, even if you could give it tolerance back over 92.60. I'd be concerned about it, because I'm still looking for one more wave down that could take us to the 91 level. But, you know, you always have to be prepared for a narrative changing. One of my favorite lines by the market master, W.D. Gann, is, if you don't learn how to change your mind, you won't have any change left. So always be ready to, if market action, price action tells you that there's a pause, maybe this is just a pause in the narrative before we head to 91. And, or maybe, you know, I don't think so right now, that this is going to be a significant low that we put in a couple of days ago, and we're going to march to new highs. I still think there's some vulnerability down to 91 before we get a better rally. And cable, much weaker than euro. So, you know, I've been pounding the table about euro pound. It still continues to perform pretty well up here. As long as we hold this 85.40, I still think there's potential for 87. And we get through 87, then we're talking about possibly a trend change. And let's move on to the yen. So yen moves with yields. So, you know, it's pretty neutral here. But if I'm right about a continuation move in yields, the yen should have some strength to take it all the way up to this level, up here around 112, which is another 200 pips from here. The only thing that would change my mind would be closes under 108. I thought we could still trade, you know, 107.60 before we head up. But again, being prepared for every scenario, it's actually pretty neutral to me. The dollar has been the better short than the yen. See that? So when you look at the break in the dollar compared to what's been happening during the yen has really, you know, held up pretty well. So the key is 10-year yield. So here's a couple of targets that we could have for 10-year yields. This was a 23 bip rally. Okay, so if we, you know, have a couple closes above 136, that would take you up to about 160 would be the measured move. That's up here. Although there's formidable resistance at 148. If 148 becomes a resistance zone and then we break out through it, then you're talking about new highs. Then you're talking about 180 above these highs. And what doesn't like higher yields? What doesn't like higher yields are precious metals, the NASDAQ, tech stocks, although they're actually holding up better than the S&Ps today. And S&Ps are putting in somewhat of a negative day here. So looking at what's happening here in stock indexes, the S&Ps really look heavy to me. I still think there's a chance for a top, or at least a 100 pip break to the downside here in this particular hourly 4-hour chart that I'm showing here. And one other thing, I do want to point this out. You know, despite the huge move that we had in the S&Ps, right? consecutive new highs. Let's go to the daily. I mean, consecutive new highs. Okay, we're not confirming up here. But what's interesting, even in the face of the hurricane, which has shut down production in the Gulf, if you look at the crude oil market that topped back in July, we've had one, two, actually so far 3 lower highs. And on the way up, crude was leading risk all the way up to these levels that we had. And now each rally seems to be a little weaker. There should be some support at 65, but the crude looking a little bit heavy to me, as well as what's happening here in the, what do we have here in the copper is also looking a little weaker today. Some people are calling this a head and shoulders developing on a shorter term time scale right here. This would be your neckline. Right here. So kind of call this a neckline in your head and shoulders. And the move under here is going to take us down to about 410. So you have to be careful about that. Taking a look at what's happening here in the VIX. Nice pop in the VIX. So, you know, I've been talking that we're still not making new lows in VIX. You go to a weekly and maybe we're going to come out of here. There's going to be a lot of room to run in the VIX if it's possible that we have this correction starting in the S&Ps. So just wanted to bring everyone up to speed with what's happening here in the indexes. Also maybe touch a little bit on crypto, which made new highs for the move at 52,000, and we're getting kind of a negative weekly candle. I know everyone's talking about 100,000 Bitcoin, but when you look at this action that we're having today, we did not confirm that high. Let's see, on the 4-hour we did, but you look at this daily, I now would be waiting for some type of break to buy Bitcoin. And if you bought it from this falling wedge breakout that we had and you were patient, it was a tremendous move for you. So I hope that you guys enjoyed this ride. I'd be going to the door here on a weekly. If you just do the fib retracements on this, I think you'll see it probably 61.8 to 78.6. Be careful with your crypto here is the bottom line. And gold shares lower. I would love to see the GDX trade down here around 27 in the next month or so, October into the fall. I'd like to be a buyer of the metals. So if you recall last week, whether we get a new high or not in the gold, that I wanted to see a pullback to about 1760, 1750 for an entry. And it's easier for me to call that than to say where silver is going to be during that same time frame. So I'm going to key silver buy on gold attaining these levels down here at the 750 level. So we have a little bit of a, you know, dollar strength, a weakness in metals, higher yields, but I think the yields are really the ones that you have to pay attention to. And just take a look at this. I'm going to wrap it with TLT because, you know, it's all about yields. When you have no competition, and right now there isn't a lot of competition because real yields are -1. But if you start getting some more pressure on the long end, and when you look at this weekly TLT chart, all we did is from an oversold level, no divergence, rallied back to a prior support, new resistance. And if this market was good, we'd be above it. And, you know, still looks to me like the path of least resistance is down, higher yields. So you just have to prepare yourself, everyone, with what's happening in these markets by knowing that yields are heading up. It was neutral, it was a coin toss, but you get an important number like you did Friday, and it was really the type of number where rates should have dropped on that number, and instead they reversed. Here's something that'll look dramatic here. This was a candle, all right, and it held that 123, the bottom of the range, and here we are trying to break out. So to me, it looks like higher yields are coming, and you have to factor that into your currency trading, your precious metal trading, your equity trading. I'm not sure if crypto cares about yields, but almost all asset classes across the board are measured by opportunity cost. And if yields continue to rise, and I'm looking for them to rise more on the long end of the market than the short end, because you know who has control of the short end. I want to invite everyone to join us here in TradeGate Hub, post your charts. If you've been watching the videos here, I bet there's some times that you're watching them and we're getting some pretty good viewership that you wish you could ask me a question about, my commentary. So if you come here between 9:30 a.m. Eastern time and 10 o'clock and bring your questions, bring your charts, and if you want to ask me how I came to these conclusions, what kind of technical methodology I'm using for making these decisions, or you want to share your work, because I believe we can learn from everyone. So come here and become part of a community. I always say, don't isolate, collaborate, because we only have two eyes. And I'm a big believer in communities, because a lot of some of my best ideas come from intelligence gathering and talking to traders and analysts whose work I respect. I never take any idea blindly, but it could point me towards something I may not have been paying attention to. And I guarantee you that'll happen here for you in TradeGateHub.com. As I always say, don't just count your pips, count your blessings. And we'll be back with you tomorrow. Have a great day trading, and pay attention to what's happening in rates when you're making your decisions on currencies. And we're definitely getting a little pop in the dollar along with that. But remember, key area so far, it's come off this 92.5 level. So you could tighten up your stops if you're still short the dollar, and get out of the way if there's going to be more left to the upside. So everyone have a great day. It's our mission to build up and edify traders every day. We do it through our videos. I cover a lot of FX and outside markets, and we have Michael Venezia here, who's a stock picker and sector picker, and his work is excellent. Come in here and check out his process before the market opens. Michael's ahead of the opening with his ideas. He doesn't wait for the market to open to know what he wants to do, and neither should you. You should have a plan coming in before you're looking at the markets, instead of just impulse trading. Impulse trading can lead you down the road of ruin, and that's why you have to plan what you do and not just say, well, hey, that looks good, I'll give it a shot, because that shot could backfire. So everyone have a great day trading. Was nice sharing this. And my key takeaway from the NFP for the 100th time today is yields look like they're heading up. So good luck in the markets, and we'll see everyone tomorrow. Adios.